Hedgeless Horseman here. In this video I will talk a bit about my investing approach, especially as it relates to sentiment and what kind of cases I like to basically hodl for the long term, and why I think they have the best potential in terms of fire and forget, let's say, where you don't really where you can sit on your hands and hold for a long period of time, and hopefully you will actually have some decent to potentially great results. And I will use Eskay Mining as an example. First off, as per usual, just recapping sentiment levels, as the chart of Bear Creek Mining suggests, we are near extremely depressed sentiment in junior miners. So if there was ever, in my opinion, a time to be a buyer in the juniors, especially, and even more so in the gold juniors, actually, because price of gold has held up better than the silver price. That would be now, just my opinion, of course. And this chart is one I have shown before. GDX to Bear Creek Mining ratio, again suggesting buying opportunity that only come around a few times per decade. And we can see here, this is just several stocks that I own, and the candlestick chart is GDXJ. So obviously, especially from this period of time, they correlate quite nicely. So obviously, not all these companies have suddenly gone down in value. That the market is always right and all of that. Many companies in here have been doing work, or made acquisitions or whatever. Probably on average, I would say that the overall value trend has been going like this, and price of all have been going down. Again, this is where sentiment comes in. The market, especially during tax loss selling, is not anywhere near rational. So this is again, I don't try to pick bottoms. I don't try to really trade per se. I try to always keep in mind the, let's say, value trend of the company, or the current value of the company on a risk adjusted basis, and the expected trend forward, and then just look at price and see what cases offer the highest gap, let's say, from my assumption of value and value creation trend, and related to price. Anyway, so to the matter at hand, Eskay Mining, which has been the main performer of my portfolio over the last year or so. I wrote about the company. I don't remember what it was trading at. I think maybe 80 cents, perhaps, something like that. This is one of those cases I really like. First of all, because I don't feel I need precision, let's say. I don't feel the need to really trade that much. There's a few reasons for that. First of all, what I like with exploration stories, and I know this is basically Quinton's way of thinking as well. He likes to swing for the fences, let's say, because what I want to see now, no-brainer case, is that it's either so cheap that it becomes a no-brainer, even though the project might be relatively small or whatever. The price is simply so low that there's no way I'm making a mistake by overpaying. But I really like growth, and I really like growth stories with huge blue sky potential, and where one can actually, miss by a lot and still come out, good to great. Because in the and I've just added some kind of short pattern here to just basically highlight the fact that we have no idea what the future holds. There's going to be ever-changing fundamentals in any company, assuming they're actually doing anything. And it's our job basically to, in my opinion, estimate the probabilities of different scenarios happening. So look at one of these channels, let's say, as the growth trend in different scenarios, and we have a blue sky trend up here if everything comes together, if everything clicks basically, and you have a worst case. But there's obviously a lot of middle ground in between. So for Eskay Mining, my case was that they own pretty much the entire Eskay Creek district. They had already, some confirmed hits in some places. And well, back then, we didn't know much more than, okay, we knew Siblulu had, precious metals, etc. And we knew some other legacy targets had precious metals. So it was kind of a gamble in that respect. But what we do know about, for example, VMS districts is that VMS deposits always come in clusters. So the balance of probabilities would suggest that there would be more deposits. And given the quality of the team, my guesstimation is that they would find one or more VMS deposits. And as time has gone, they've learned a lot more. They've applied geophysics like SkyTem, for example, to highlight TV Jeff, and a bunch of, numerous, 15 plus or something, potential VMS pods. So the blue sky has kept increasing, and the chance of success has increased with the new understanding, fueled by, John de Decker's big brain, and Quinton and Thomas Moneke, and the fact that SkyTem seems to be very efficient. So both blue sky has increased, and that includes finding outcropping Scarlet Ridge and bleg sampling the whole district, which made different areas light up like a Christmas tree along multi-kilometer trends, 3 anticlines, etc. So again, like just over the last year, the blue sky potential, inferred blue sky potential has been going up. The geological understanding and chance of success has been going up with the use of SkyTem and the basically confirmation that SkyTem works, and again with the better geological understanding of what is actually happening. That's again potential. That's not a confirmed deposit or deposits, but the in my opinion, the, let's say, blue sky scenarios has hopped up a few notches. Maybe it started here when I actually wrote the case, and now it's up here. That's the stuff I like, because okay, if blue sky happens, yes, we'll even from I don't know what the market cap is right now, but let's say 340 million. If absolute blue sky were to happen, that would be several billions in value, even more than that, the more time they would have, working on it, let's say. But it also means that you can afford all of a sudden to miss blue sky by, let's say, half. And you'll still end up with a very good return. Whereas prior to, SkyTem, bleg sampling, geological understanding, maybe actually the risk-adjusted blue sky was here, and 50% of that blue sky would be down here. So again, as blue sky keeps increasing, that means that obviously the blue sky potential keeps increasing, which affords a speculator to miss larger and still come out good. And obviously the maximum potential goes up as well. And I like margin of safety, which I keep on harping on about, because I mean you can't compound a loss. So I think that is very important. And in this case, since when I took a big chunk of Eskay, it actually didn't have really margin of safety. Well, we knew there were hits at Siblulu, etc., and that's quite close to the original, or it's on trend with the Eskay Creek deposit. But it still wouldn't be considered, a deposit or even a resource at that point. But as I explained in my piece, I saw Eskay Mining as having a let's say, probability-based margin of safety, because I believed they had so much potential and amount of targets within their land package that the odds of them finding at least one deposit was a lot higher than for a typical early stage explorer. And of course now we know they've hit that, TV and Jeff. The first maiden drill campaign was absolutely bonkers. They hit the feeder TV, which was announced a few weeks ago, I guess, with I don't remember exactly, but like 90 meters of 2.5 grams per ton AU equivalent, let's say. So I mean that speaks to the potential quality. And of course, this past week we had I think, I don't remember how many holes, 17 or 30, whatever. We had several holes out, and they weren't necessarily as good as the last batch. And what is typical is that I think, I mean, the whole, I've held on to my share this entire time. I haven't cared that much about any particular news release, because again, if this is the future scenarios, possible future scenarios, one news release is probably not gonna, it basically can't kill it. I mean, even if you drilled a few or 30 dusters, semi-blind, drilling, TV or Jeff, that wouldn't mean that Scarlet Ridge or Vermilion or C10 or Cumberland or Spearhead, etc., that they would be dusters all of a sudden, or implied dusters. So I saw, I mean, there's a lot of, which is typical. I mean, people, I think, in cases like this, people put too much, put too much importance of a single news release, let's say, especially this early. I mean, they haven't even tested the whole stratigraphic units of importance or potential, let's say. So I mean, this is super early still, and there's probably no drill results can be bad enough in this campaign, in my opinion, to even kill the case, even if all came out with dusters. But as happens, I do see a lot of people, they a couple of holes, because they're basically prodding around. I mean, they're still trying to figure out where everything is, and that's just from TV Jeff alone. I mean, that excludes all the other targets where they haven't really begun to focus on. I mean, there's the chance of them hitting the best intercepts or finding the bullseye, or where the VMS horizon is the thickest and highest grade, just on the first or second drill campaign, and that's almost close to zero chance. So again, I wouldn't read too much into what they're doing right now, because they're still in the process of figuring out TBGF. Anyway, and one thing I like is, see the future early, because I don't think, and that ties into one news release is not a case. I do see people, I think majority almost of junior speculators, they see some holy grail of a news release, and that's why they're invested in the stock. So basically, like, if they're expecting, the typical scenario is that someone buys before assays and hope to get rich tomorrow, even though that never happens. There's never a one news release that creates a 10 bagger by itself, and still people take the risk of doing that. I've done it myself. It's just that when you think about it, it's so obviously irrational to do. But let's say you buy here, banking on the very next drill results to be good. So then you have a time horizon of, I don't know, a few weeks, a month, and if they disappoint, maybe it goes down there, and if you're correct, maybe it goes up there. But then what do you do? Compare that to, the big growth cases where, okay, this is one news release, but there's going to be a bunch of news releases. They have targets enough to last them for, many years. They're putting in a road basically with Seabridge. That speaks to, you don't put in a road, with a 1 month time horizon. Their belief is obviously that this will be a mining camp in the future. So I like to, again, aim high and be able to miss big. And I like Eskay, not because what I think the next news release will show, but what I think will have happened if I hold through the next, let's say, 10, 20, 30 news releases. I think on average value will have been created. Let's say, if they test 6 targets within 12 to 24 months, I think the implied value of Eskay Mining will have gone up. That's all I need. So, okay, do I think there's a pretty good shot of Eskay Mining at least doubling its, implied value on a 12 to 24 month basis? For sure. I think there's potential to add a lot more than that. That's all I really need to know. For worst case to happen, they will have to basically miss on all those targets. And TV and Jeff will, despite looking so good right now, will have to turn, into dog shit, basically. I don't see that as likely. So from a risk-reward perspective, I think the trend is very much something like this. And depending on, if they hit on, if the surface samples at Scarlet Ridge come out, good, that's 1.5 kilometers of outcrops, then I think the let's say growth trend would jump up to, maybe here. If they take a lot of samples and it's quite poor, then it might go down here. If they hit at C10 or whatever, it might go up there. If they hit at both, or Vermilion. If they hit at either Vermilion or C10 and Scarlet Ridge, looks to be quite promising. Maybe it goes up to that. So if you know what I mean, we don't know what's going to come out of those preliminary results. They will for sure not be definitive. If they are, show a lot of promise, that's a very good sign since it's so early. If they don't show that much promise, it doesn't say too much since it's so early and they're just drilling blind. So I think that's, asymmetrical an asymmetrical bet basically, because I mean the less you know of a system, the chances are higher that it can be good and you don't get great results. Whereas if you actually get great results, quite early, that suggests that it's a very robust system, let's say. That's one thing I don't think people really, uh, you know, are aware of, let's say. Again, it's like I'm holding Eskay Mining based on the possible trends, value growth trends I see over the coming, 12 to 36 months. And there's no drill results coming out anytime soon that will decrease the potential enough for me to be a seller here, really. I don't think so, at least. I mean, I'm not gonna make any promises, but I think that would be irrational of me to do. And again, it's like the more they drill TV and Jeff, they're gonna be adding on some margin of safety, which is of course very good. Even though, I mean, they're not even close to a resource or anything like that. But again, the I'm just gonna pull up the. Okay, that's still the outdated one. I thought they would. Oh, okay. They didn't have the. They didn't have the district version. But again, it's like you see, there's pods all over the place, and when I see, some people throwing in the towel based on one batch of semi-blind drilling, where they're still trying to figure it out, and you have all of this, and you have a 300-meter step-out hole, and you have all the other targets. I mean, that to me that makes no sense. Apparently, it makes sense to other people. Who's right? Well, I guess that's, I mean, impossible to know. I just know that so far this approach has been pretty successful on average to look at the big picture, look at the forest, and understand that just probing one tree can't break a forest when it's this large, let's say. And yeah, well, I think that summed up Eskay Mining. Maybe it wasn't. Maybe it was a bit, I don't know, intangible in some way. But I hope you get my point that with cases that have this is tier 1 exploration potential, district scale, multiple targets in probably at least one of the absolutely hottest jurisdictions right now based on the M&A activity we've seen. I'm just my plan is to hold on to Eskay Mining for dear life, and we'll have like we see in the great successful exploration stories, Great Bear. I mean, you'll have your ups and downs, etc. But if the value trend is going up, I mean, you can't ask for much more, because you will have these dips where it basically detaches from value. This was the flash crash, and then it will revalue again, and then it might overshot value actually, and then you have a sentiment low again, like we see in sentiment indicators. And right now, okay, Great Bear is revalued. Is probably because there's maybe a leak or whatever. But I mean, you'll have these sentiment lows like we see now in juniors across the board. So they're detaching from value, and I think this is not reflection. I think the current price is not a reflection of the implied value of Eskay Mining on a long-term perspective. And the coming news releases, etc. Given how early stage it is, the importance of or the impact of good news is higher than the importance of bad news, exploration news, simply because it is so early stage. We have no idea where the best horizons are. We have no idea where the best parts of either system is yet. So the fact that they've gotten, you know, this kind, these kinds of hits this early speaks to, in my opinion, the robustness of the system at TV especially, and also Jeff. So it's going to be an asymmetrical impact in terms of risk-adjusted value for Eskay Mining, given the early stage of the exploration progress. But and that's why I think that's where you can get an edge, realizing that, because there's going to be people who, in my opinion, don't appreciate that fact and will basically treat, let's say, results that are coming, under expectations. They're gonna treat them as more impactful to actually long-term expected value than it actually is. So I think, this movement here, for example, this is a joke. There's no way that a few early stage drill results from TV and Jeff impacts the long-term expected value for SK like this. No way. I mean, they might they might hit the better parts of the systems in the holes to come, or next season, or whatever. It's like, again, it's so early that success would be, even if there is a great deposit there, early success is more rare. No, bad success, let's say, is more rare than no, good success is more rare than bad success, given that they don't know enough about the systems. I mean, the best example would be Eskay Creek. The discovery hole was number 109. So even though there was, the best gold and silver VMS deposit in the world there, it still took 109 holes to actually hit it. And that just proves my point. That they drilled 108 holes before they, got into the bullseye. So, yeah, again, it's like, I guess it just, highlights the point that when exploration is early, you should not, in my opinion, discount below average expectations results as much as good ones, because there's a higher chance of not being in the best parts of the system than actually hitting the best parts of the system. And I guess that sums up my view. I know a lot of people probably don't agree with my way of thinking about exploration and juniors overall, but to me this makes sense. Thanks for listening.